Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your financial market update for this Thursday, the 20th of April, 2017. And we're getting on to 3:30 p.m., and that is Central Daylight Time. This is where the settlement price is going to come in on these stock indices. They've suspended the trading, and now it picks up again in the last, if you will, 40 minutes or so of the day. And as we're looking at what's going on here, you had a good rally, in part because our U.S. Treasury Secretary, Mnuchin, said that they are working very hard on the tax reform and that they expect something to be this year, sort of countering what Paul Ryan said yesterday, so giving the market that ray of hope. I'm very bothered, though, by the energy prices not holding up very well. And if they don't hold up well, regardless of what happens there, you start getting a 40-something in the crude, and that's going to weigh on the energy sector and could create problems as we're seeing them. Now, in terms of the bonds and the notes today, the yields went up a little bit, and as we get to the French election, that's not uncommon. The question is who's going to win. What you don't want to see are the two wings, the far left, far right, win and go into the runoff. I say win because nobody's got a commanding lead from the looks of it, at least, where you have to have the majority vote, over 50%, to not even go into a second round. That's very unlikely at this point. But if you get the far left, far right, they're both running and talking about leaving the European Union and certainly leaving the currency, and that causes a real problem. So be aware of what's going on. Understand gold is looking at that. Silver down a bit today. Let me come back here into the stock indices for the weekly chart. You know that we've been coming down. The market today is up 24 points. That's a pretty sizable rally in the marketplace and fairly impressive. Now, it still doesn't take out this high that I'm pointing to right there. So on the weekly chart, it's a bounce, but it is not a change in the overall downtrend. On the daily chart of closes only, you flipped back to an up thrust. Now, instead of the market coming down as it had been doing here with the lower highs, lower lows, you suddenly have picked yourself up. So I'll be looking at this 23.2750 level. Close under that for the week. It could be real ugly on these charts. Say above it, it's going to look a lot better. And as you can see, the action here is choppy. I mean, very choppy. You have worked your way back down from the 2400 level to as low this week as 23.25, and you're just sort of sitting here now coming off that very nicely with most of the gain of the whole thing occurring today. So that's impressive in itself. When we take a look at the swing line, you got up high enough today at 23.5825 to take out the last rally high. So you no longer have that pattern of lower highs, lower lows, which I define and most technicians do as a downtrend. You have a higher high and a lower low, which is no trend at all. And I'm not surprised that the battleground is the 18-day average of closes. That's what I teach you when markets aren't trending, and you're not trending here. You were trending, you got down hard, but you know what I'm going to tell you. The Bollinger Band has supported this market, and it continues to do so. This one shot you had to extend the band failed. You're right back to the 18-day average of closes. And if you look at momentum's starting to pick up again. It would not be a surprise if prices try to rally to the upper Bollinger Band and then turn down from there. There is no trend, so it's hard to tell you what's going to happen there. When we look at the Dow Jones, you have a divergence. You have momentum trying to pick up. The market still has a pattern of lower highs, lower lows. It's got to get over that 20,584 in order to negate the downtrend. The bears will probably defend it as they did today, probably selling this market, the S&P, and I mentioned this in my morning update, with stops right over that 23.56.50 area. They didn't want to see it get over that. And you've slipped back from there, but that's what they didn't want it to get over. And you don't want to see 20,584 penetrated because that ruins that bear trend. Got it? Momentum pointing up here. Stronger market, certainly the NASDAQ. This has been the poster child of strength in the stock indices. Momentum pointing up. I'm looking for the upper Bollinger Band to be hit. But are we coming out of this tight range? I don't think so. And that makes trading these stock indices very difficult. It's a little wider band, if you will, for the Russell, but it's the same problem. You get up towards the upper band, you fall back. You get towards the lower band, you rally back. And the action on the current break was supported at the 100-day and the 18-day average. Now, will they get a positive crossover where the red gets over the green? In other words, get 1365.50 over 1366.50. So you got to get the 1367 or some type of number in there and close positive to say all of a sudden, hey, the Russell just had a bullish crossover. I don't know that it's going to mean a lot. We had a bearish crossover here. You carried right down by that Bollinger Band where it should have gone. If you get over it, the upper Bollinger Band's right here. What I'm saying is I'm not sure you're coming out of this type of trading range. Look at the failure in the VIX as it got up and then slipped back. So the VIX, as it got up like that, had no follow-through, and you're just coming right back to this 18-day average of closes, and momentum is still pointing down, which favors the stock market. Now, when you go to the 30-year bond, you were having this thrust up, and suddenly yesterday you paused, got back under the upper Bollinger Band, and today as well. You still have an embedded reading, but if you lose that, with the red line closing on Friday under 80, odds favor price and the 18-day average are going to make a run for each other. Here's the wild card. Playing for anything in this market, you're playing the French election to a large degree. Why? You have no call on it. You have no say in it. I don't know that it makes sense. You know, if you have to trade, you trade. But just telling you, position trading is going to be hard. When you look at the 10-year note, you've got a current pattern of a lower low, a higher high. At the same time, you have stayed above the 18-day average of closes since mid-March. So the bias is clearly to the upside. We had a bullish crossover where the 18-day average got over the 100. And up until 2 days ago, the market just kept making new highs on the move. Now with the embedded reading that you're trying to set up, and let me show you, both numbers over 80, both numbers over 80, but not the day before. Tomorrow's the key day. But even if it does embed, so what? You're still playing the French election. I don't know. It's a rough one there. In the dollar index, to negate the current downtrend, that does not mean you have to start an uptrend. To negate the current downtrend, all you need to do is take out 99.78, which is 8.5 points away from where we're at right now. Not very much. However, because today's low is 99.29 and the previous low was 36.5, even if you take it out, you don't start a trend. You'll end up with a low that's under a previous low and a higher high. Let's talk that the market doesn't take that out and wants to continue down. First thing I tell you, you're oversold. Second, pretty strong support waiting for you at 99.09. A difficult call there. In the euro acts like it does not want to extend up to the upper Bollinger Band. It acts like a market that wants to fall back into the support area of 107.17 to 106.98, and why not? You think there's not money, taking money off the table there, wondering what the French are up to, how that's all going to play out? I absolutely do. So I think that there's just evening up, but it is an uptrend right now. The pound, a different world. They don't have to worry about the French one way or the other, and they've now got 3 days in a row where they're closing over the upper Bollinger Band in a what? In a market that's overbought. Therefore, the odds of it staying like that for another 2 days, very small. However, when you get action like that, you typically don't expect a dramatic price break either. The market's telling you it's got a lot of strength built into it. In the Japanese yen, a little bit different. The market's trying to break down, as you can see, momentum turning to the downside. We've got lower highs, lower lows over the 18-day average. So I'm going to say that the bias is up because you're over that 18-day average, but the short-term trend is down. They're fighting each other, and momentum is turning to the downside. I would be totally unsurprised if we get to 90, 95 and try to find some support in that general zone. Last, in the crude oil, momentum still pointing down. You took out a previous break low, so this whole rally has given itself up in no time at all. And that's a problem for these markets. You know, back here we were talking that we were going to get into the $60 range. We came back on this whole rally, got back into that general area, and have completely and miserably failed one more time. It's a real problem. And what number does the market keep failing on now? Back here, the 100-day average was acting as support. And that was because back in November, we heard OPEC say they were going to cut production, and that got the markets up from way back in this time frame. And then once we got under that number, the first challenge of it again has ended up in a failure. I wouldn't be surprised that we hang around 151.64, but if you close under 50 tomorrow, be careful. You might be headed to wherever that lower Bollinger Band comes in, and that could be ugly. Gasoline took a shellacking, as you know, the past couple of days because of the build that we saw in the EIA inventories. Whether it's foreign gasoline coming in or not, it adds to the supply, and if we don't start using that supply, the fear is that the refineries, which are running around 92.3% of their ability, which is considered full run, by the way, will cut back, and that gets a little bearish. So very tricky time right here, but you slid just enough under that 18 that maybe you go back to it and the market tries to figure out what it's going to be when it grows up. In the nat gas, we had a draw that was, rather a build today. I said that wrong. A build in nat gas that was higher by about 4 billion cubic feet than the trade thought, and that added to some weight on the market. But I think if you look, you're really caught between the 18 and the 100-day average of closes. You have a condition where you're already oversold in a downtrend. It'll take very little. Get over this 331.20, and if you don't extend this under 320.60, you can get a buy signal out of it right away. Very tricky little market here, and if you'll notice, the ranges are narrowing in, not really going anywhere. So let me talk to you about modern trader and profitable trading strategies in any market. Duh. Does that make sense to me in this type of environment? You know, a lot of people are saying in the grains, you're not going to go anywhere this year. You're going to be working your way down and all of a sudden be stable in them. We keep hearing that in a number of markets, maybe we've seen the current top in stock indices until the summer goes by. That could be one of the features that we're looking at. So what they did at Modern Trader is they went and they put together a series of stories into a brochure that gives you an idea as to what their strategies look like in any type of market. And the contents are this, then. Price action trading, how to trade the flat base pattern, caliber activity. Why not put this into your pocket? We make it free as a PDF to you. In order to get it, and this, by the way, is how all the stories look, all you need to do is give us a call, 866-973-2077. You can go to our website at www.iraepstein.com. You can always click right up here. If you see me on YouTube, you'll see an icon. Click on it, and there's your information again. I'm Ira. You have a good day, and I'll talk to you tomorrow.